Hey everyone, thanks for tuning in. If anyone wants to raise their hand, hop up on stage and chat, feel free. We'll get started here in a few minutes. Feel free to invite your friends. Anyone who's here asking live questions is eligible for a 500 Spa giveaway. So get some free Spa, invite your friends. We can hang out for a little bit, ask all the questions, answer all the questions that the community might have. So invite your friends and we'll start here in a few minutes. By the way, this is just a general community check-in, general AMA, so all questions go. Don't feel like any questions are off point or, not applicable. We're here to answer everything or just hang out and chat. If you want to talk about anything, feel free to hop up because I know it's a stressful time in life and the crypto markets especially. I'm going to ping some of the Sparex team, see who's going to be joining today. Hey, Sumwin, if you can sync on Telegram, that would be nice. Hey, Sub.
Hey everyone, how's it going?
Going well over here. How are you?
Doing good.
Good, good. I'm going to start with a quick introduction here. So thanks for hopping on today, Sub, as well as the community members. This is the May 25th community check-in. We don't have a specific topic for today's AMA, so it's just a general community check-in. We want to take this time to allow community members to ask questions, come talk to the team directly, or just vent because crypto is stressful and volatile. So all of that goes, but what we'll do is do a brief intro to Sparex. We'll give you some updates since last week, and then we'll allow any questions. So without further ado, I'm Alec. I do growth and partnerships here at Sparex. And Sparex, high level, is a software development firm, and we build open source public financial software. We deploy that software to public blockchains for anyone to use, to build, or to tinker with. And our goal is to make finance equitable and accessible. And we really think open source public protocols on public blockchains are the tools to do that. And our priority is to create safe, secure, and reliable protocols for the new crypto users. So we want to make everything as seamless, easy, and as secure as possible. So we're not interested in massive risk-on plays over here. So with that being said, our beachhead product is USDS, a stablecoin that produces passive income for holders. So it is actually a stablecoin collateralized by a basket of other stablecoins. So it's 100% collateralized, unlike a lot of stablecoin competitors. And at this point, you can think of it almost like a on-chain stablecoin pool that is deployed to generate yield. Then that yield is just passed right back to the stablecoin holder. So it's a nice, safe place for you to keep your stablecoins to capture passive income without having to go through the complexities of staking, claiming rewards, or even having to deal with something as simple as like a curve. We can automate all that for you. You park your stable coins, you earn passive income. It's great. So really, like I mentioned, we're here to focus on sustainability and stability because the bear market is hitting everyone pretty hard. So we need to create a product that is a safe haven for a lot of these crypto users. And that's exactly what we're focused on with USDS. So since the last time we spoke, there are a couple updates that are worth mentioning. High level, we're still continuing with our protocol upgrades to ensure that USDS is hyper resilient and the peg is extremely tight, but still generates that passive income, which is the killer feature of our product. So in light of the USDT collapse, or the UST collapse, excuse me, the whole Terra Luna situation, we're doing a couple very tangible steps to make the protocol resilient and safe for new users. So first, as I mentioned, we're 100% backed. That means for every single USDS that's out in the market, there is one USDC or USDT sitting in the reserves. So this is important for you as a USDS holder because at any given point, one can trust that there's always a stablecoin that you can swap your USDS for. So this enables a price floor, and you don't subject yourself to the risk of peg deviations because if the peg is slightly lost, anyone can use their USDS to go grab a USDC from the reserve, and boom, the peg is restored. So it really is a mechanism to ensure in the short term that USDS is extremely safe and always pegged to $1. And second, we're finishing up our DAO research, and we're very excited to make all of that public. Hopefully by next week, we can at least let you know what the exact plan is. But the purpose of this is to ensure that the system is actually a stablecoin protocol, and we don't subject ourselves to putting ourselves in the position of being a centralized stablecoin issuer. We don't think it's appropriate from a regulatory standpoint, and we don't think it builds the best ecosystem. So we really want to be open source, decentralized protocol that can plug into other decentralized applications. Finally, we have a SPA burn. So we're burning 500 million SPA, and this is very, very important because what it's doing is actually reducing the power that the Sparex Foundation has in the ecosystem. And this is further positioning the whole protocol in the arena of being decentralized, censorship resistant, instead of being more so like a stablecoin issuer like USDC, USDT, or even the Terraform Labs situation. So those are the three very tangible steps that we're taking to become more resilient. And during this whole time, auto yield is continuing to chug, so you don't have to worry about your auto yield installments. Anyone holding USDS in their wallet will receive the 11% auto yield. And on that note, we have our final point I have on updates, which is we're announcing our StreetBeat partnership tomorrow morning. And this is super important because StreetBeat is actually a fintech application with 50,000 active traders. So these traders now have access to a passive stablecoin strategy powered by Sparex. And it's super cool because it's actually bridging the gap between Web 2 fintech products and Web 3. So now a traditional retail investor who's not familiar with how MetaMask works, who's not familiar with DeFi protocols, especially Arbitrum, and these deeper, more nuanced ecosystems, all they have to do now is download a mobile app, StreetBeat, plug in their bank account, and boom, they have access to USDS and the passive income it delivers. So we're super, super excited about that. And we believe this is going to be the first of many different fintech partnerships that we'll be releasing and announcing over the next couple of months. And in light of the bear market, we envision this is going to be a significant demand driver for to get us through this bear market, because a lot of people are looking for risk-off yield generation, and we're here to satisfy them. So we'll be working with many fintech companies to plug in at an infrastructure level to deliver their users the power of DeFi and the power of passive income. So that's my monologue. Those are the updates from the Sparex side of things. Sub, if you'd like to add anything, feel free. If not, we'll be moving on to questions.
Yeah, I think you pretty much summed it all. I can maybe speak about the product roadmap that we have in place right now, at least, what we are thinking. It's not set in stone, but it's something that we are thinking and will probably finalize in the near future. Before we do that, I would obviously share a blog post with our community, take the feedback. And we're also trying to organize a session where we would like to listen to our users, right? So what's our roadmap right now is it's essentially about how we can generate alpha for Sparex token holders. It completely revolves around that. So what we are doing is, first we are trying to bring a new kind of a dynamic APR farm. So we all know that dynamic APR farm are in existence for a long period of time, but they're all prevalent in the Uniswap V2 model, where the LP tokens are usually fungible in nature. And it's much easier to create something like that. We have all done yield farming ourselves using that kind of a product across different chains. But with V3, it becomes slightly more complicated since you have an NFT and you have a unique position. So how do we build a dynamic farm with V3? It's one of the most challenging product problem statements that I have faced in my career so far, and really excited that we have almost cracked it, and we'll be launching that in June. So that should show a lot of confidence in our engineering abilities. It will be the first of its kind. Then we plan to create an automation process for a yield generation strategy using Curve. We want to make that entire process decentralized, and so that everyone has insights into how we are generating the yield. As we have reiterated again and again that uh, Curve is something which is generating yield organically, and so we want to sort of stay true to our commitment regarding that. Although we have removed our deployment of collateral from Curve, we will be redeploying over there and generating yield. We're also working on some additional yield generation strategies that we will use to enhance the yield component. So that's the next component that we're building. Then we have something which the community would be very interested in. We'll be launching the off-chain governance components like forums, snapshots, etc. And we plan to move everything off-chain by then. Like everything will be on forums. Like we'll have long form content. Like we want a community to engage with us over there extensively. And we will make sure that the community is is part of the entire decision making process. We would love to have debates. We would love to have discussions on what we are building, why we are building, and stuff like that directly on the forum. So that's the next step. Then we are planning to launch something called a Spark Gauge and dual token rewards. So Spark Gauge would be something which is similar to the Curve Gauge, but essentially it will act as a reward mechanism for other protocols if they want to do joint liquidity mining campaign with us. So imagine, if USDs were to launch a joint liquidity mining campaign with Protocol X owners would have incentive to own SPA tokens, and vest it in the West staking protocol to have a higher voting power. So guys, please stay tuned for the next generation of SPA wars. So that's the plan. And of course, like that would mean that we can launch farms on a regular basis. We plan to create new kinds of farms like ETH USDs, and as I mentioned, like based on different business development partnerships we will launch farms with other protocols. Then we have the launch of governance. I think that is one of the important goals for the next quarter. We definitely want to be decentralized as soon as possible, right? And then we are working on taking USDs multi-chain. We don't want to just stick to Arbitrum at this point anymore. We want to grow beyond Arbitrum. We want to extend to other chains like Avalanche, Optimism, of course, Mainnet, right? And after that, we want to extend our collateral deployment strategies. We want to generate yield from different protocols, ensure that the yield is organic and diversified, so that the risk is mitigated, and ensure that we are able to transfer that yield in a riskless, gasless fashion to our end users. So that's the whole plan that we have in place. Would love to have a solid discussion around what should be our product roadmap. Before Terra Luna happened, I think we had a very extensive product roadmap, but things kind of changed. Now we want to focus more on making ourselves more collateralized and stuff like that. So essentially, it's important that we spend some time taking a step back, rethink our product roadmap, and evaluate what is the direction that we want to take. And I think we want to spend a lot of time with the community to understand what kind of problems you guys are facing, and what kind of products do you guys want. So that is something which I am very keen and interested to learn about, and we'll be taking some steps to make sure that you guys feel heard. So we are working towards that, and please feel free to engage with us on these discussions as soon as we share the product roadmap content. Yeah, so that's probably the end of my monologue, and Alec, I guess now we can start with the questions.
Cool. Thanks so much. I just have a brief addition. So I just want to touch on this transition to the DAO real fast. I'm just super excited for it because it changes the function of the Sparex Foundation, as opposed to like being decision makers and designing the protocol itself. Rather, we're just designing the various levers for the community to adjust, to pull, to push, etc. And instead of us deciding, hey, at what setting does this lever need to be, we simply build the tool, and then we help the community understand the implications of the different lever settings. So then we become analysts for the community's decision, for the community to make the final decision. So it's just a very unique flipping of the power dynamic in the whole ecosystem, where the token holders really are the leaders and the decision makers of the protocol, and the foundation simply becomes a group of analysts educating and helping the community make these decisions. So we're very excited for that. And then a second point on the DAO transition. As Subh mentioned, once we launch our Sparex gauge, one can anticipate that various protocols will have demand for liquidity against their governance token, and they would be incentivized to purchase SPA, to stake it, and then they can redirect SPA rewards to their pool. So as Subh mentioned, this could really be the foundation of a SPA wars. And oftentimes, in these bear markets, like in 2020 when Curve launched, all of these different protocols were buying CRV to amass positions to control the gauge. So that is our objective here as well, and this could potentially produce significant buying power even through a bear market as these protocols acquire SPA. So it's just something really important to note. And with that being said, let's move on to questions. So we can answer any live questions about what we just said or any questions pertaining to the project at all. So feel free to raise your hand and we can get you up on stage. If not, we'll be going through text questions. Okay, looks like we'll start with text questions. So the first one from Jimmy Boss, stablecoins like USDT keep dollars in a bank account for every crypto coin in circulation. What is the basis of USDS, and can crypto investors trust USDS with peace of mind? Yeah, great question. So we are 100% collateralized, just like USDC or USDT. But instead of using cash in bank accounts, what we do is we use trusted stablecoins like USDC and USDT. So the same trust model, which is for every stablecoin, there's $1 worth of collateral in the reserves that is stable and non-volatile. We incorporate those same features. So if you trust USDC and USDT, you can trust our protocol because you can always swap the USDS for the underlying. Okay, next question. So this is from Roland. How fast can Sparex recover in a hypothetical event where central authorities attack USDC and USDT deposits in collateral? That's a great point. So we are rapidly working to decentralize our collateral pools. We're starting first with Frax. And the purpose of that is to ensure, that the collateral isn't, it's not easily able to be captured. And we're going to eventually introduce like really censorship resistant collateral like Ethereum, but that actually has a lot of different risk profiles that we're not going to be introducing yet. So in the shortest term, the way that we're ensuring that we're not able to be censored is by launching the DAO. So if we have a centralized control of the protocol, it's very easy to censor. But what we're doing to ensure we're censorship resistant is launching the on-chain DAO. So we're racing toward that. But in the short term, as we're still a very tiny protocol, we're working on becoming safe and stable in parallel with the decentralization. Okay, next question. It came to my attention that you mentioned that the Sparex protocol can be easily upgraded to better suit users' future needs. So why will this upgrade be needed, and how will you achieve it? We've already talked about the various upgrades, so I'm going to skip that one. Is SPA hyper deflationary? That's an interesting question. So in the SPA model, when there is an algorithmic component backing some of the stablecoin, which there isn't right now, a small portion of SPA is required to be burned when minting the stablecoin. So it has deflationary components built in, but I'm very reluctant to say it's a hyper deflationary product, as that seems a lot like the Terra Luna product, and we're just so far away from that when it comes to risk and how we're backed. I would have to say that we're not a hyper deflationary product, but there are many different ways in which SPA is burned, and the growth of USDS directly drives value to SPA, a whole bunch of different reasons that you can check out in our docs.
Hey, I would like to add to that. So apart from the SPA being burnt with algorithmic component, one of the other aspects is people have to mandatorily lock SPA in the vesting contract, in the staking contract, to participate in governance and to vote on different protocol incentives. As we previously mentioned, like if protocols wanted to drive incentives towards their own liquidity mining campaigns, then they would have to stake SPA and lock the SPA tokens in the staking contract to have some kind of a bargaining power. So essentially, it is deflationary. At least the supply is deflationary in nature. Like that is the design that we are working towards. So yeah, I mean, it is definitely going to be deflationary.
Thank you. Okay, on the note of SPA burning, a gentleman has a question around how much SPA is burned. So assuming that we have a collateral ratio of 95%, which would mean for every dollar that's minted of USDS, 95 cents of USDC is deposited, and 5 cents of USD or 5 cents of SPA is deposited. In the event that SPA increases in price, this gentleman is asking, hey, how does that implicate how much SPA is burned? And that's a great question because it is only reflecting, or it considers the dollar value, not the units of SPA. So in the event that a user is minting 1 USDS and 5% is SPA, it will burn 5 cents of SPA. So if the price of SPA is high, it'll burn less units. But if the price of SPA is very low, like right now, the protocol would be burning significantly more units of SPA for every USDS that's minted. So it always considers the dollar price. So higher SPA price means less units burned, and vice versa. Okay, just going through the next questions here. Is the SPA token burning mechanism the same as Luna and UST burning? It's very different because our stablecoin is not collateralized exclusively by SPA. A very, very tiny portion is collateralized by SPA in the normal state. But as the protocol is in a safety stage right now, in light of the UST collapse, it's 100% backed. So as the protocol matures and as the community decides to reintroduce the algorithmic component, we will have a burning mechanism, but it's going to be a very, very tiny portion of the collateral. Nothing like the Luna system, which was 100% collateralized by the burning mechanism. I hope that answers the question. The next question has to do with SPA burning. And the question, there's a second part which has to do with manual burns. So I want to just answer this because we do like the traditional model of SPA burning when USDS is minted. But in light of the recent market activity and the distrust around algorithmic stablecoins, we have elected to go 100% collateral. In the short term, that means no SPA will be burned when minting the USDS. So you might think, well, what the heck? That's the big value accrual mechanism. But not to worry, because what we've done to subsidize that burning in the meantime, the Sparex Foundation has elected to burn 500 million SPA. This is 10% of the total supply of SPA, and we're doing this to decentralize the protocol, but also to subsidize users in this period where SPA is not being burned during the one-to-one minting process. So you might say, okay, well, this stinks because no SPA is being burned. We've actually already burned 250 million worth, which is over 16 million US dollars worth. So we've already burned well enough to compensate for any of the SPA that would have been minted in the next couple of months through the USDS, or the SPA burned through the USDS minting process in the next couple of months. So not to worry, there's still tons of SPA being burned, and we do prefer the traditional model where it's burned in the minting process, but in the short term, we have to go through a manual burn in light of the market conditions. So the question of will we still burn SPA with one-to-one backing? In the short term, no, but the foundation is subsidizing that burn plus much, much more. Okay, so there's a question around our capital outflows compared to some other decentralized stablecoins. I can at least speak to the Frax situation. So Frax suffered an almost 40% decrease in their TVL during the recent or post-UST collapse. And we have not quite suffered that much. We're at about 35% decrease in TVL, which we just kind of expect to happen due to the distrust of Nago stables right now. But in order to reinsure confidence, we do have that one-to-one backing to ensure everyone's safe and stable within USDS. If there are any questions in the audience, feel free to raise your hand. Sue, please let them up if you see it. I'm looking through these questions.
Sure.
The question from Mocker, I'm not sure what it actually means. If you want to rephrase it, feel free. All right, so this is a good question. So what is the current ratio of CRV farmed by collateral versus yield payouts to USDS? And what might be the break-even level of USDS currently, which ensures that CRV Treasury is not paying, is not subsidizing all the yield, basically. So to directly answer your question, we have enough CRV in the reserves today to fund over 2 months worth of auto yield. So I just want to put that out there first. And up until up until last week, we've been using 95% of trading fees. So almost all of the trading fees have been enough to subsidize the whole 11% auto yield, which means we've been just collecting the CRV as excess. And this is a strategic move because we want to become large CRV holders in order to have power in the Curve ecosystem. But when it comes to what that break-even level is, we have roughly, I think it was 2 million USDS right now collecting auto yield. So that was enough to basically, or we had enough collateral to fund that with just trading fees. So I don't know exactly what the break-even level is, but up until now, we haven't had to sell any CRV in order to fund the auto yield rate. But I can get, feel free to follow up with me on that, and we can get exact numbers for you as well. Okay, the next Hone guy. So he asks, can you vote for the burning mechanism when Sparex DAO is launched, and when? Great question. So this is going to be one of the most important roles of the DAO. They get to determine what the collateral ratio is and at what rate the collateral ratio decreases every year. So that means it can start 100% collateralized, which it is now. And the DAO gets to decide at the end of the year what is the new collateral ratio? So if it's decreasing at 1% per year, at the end of the year, it'll be 99% collateralized. So to mint 100 USDS, it would be $99 worth of USDC, $1 worth of SPA, and the DAO gets to decide to increase or to decrease that rate. So if you increase the rate, there is more SPA, your protocol is more scalable, and it burns more SPA in the process, but you have less collateral to work with, which could cause peg instability. And it's going to be completely up to the DAO to manage that risk profile. So that way, the protocol always reflects the amount of risk that the community members are comfortable with, and it's not going to be determined by the Sparex Foundation. So that's just a move to pass off all control to the community and not make it reliant on the decisions of the Sparex Foundation. So this is a question about the saddle farm. So this gentleman, Fran, has been away from the project for a couple of weeks, but has been recently notified the saddle farm has been paused. Go back to the saddle farm. There should be no issues. The SPA rewards were running low, but they've been replenished. So go back to saddle and go try again. You should be able to do everything just fine. So no issues on the saddle farm. Go ahead and deposit, withdraw. People are earning over 20% APY on their USDS. All right, I think that those are all of the questions from the voice channel. There were a lot of repeats in there, so I'm sorry if I skipped your question, but there's just a lot of repeats. All right, one moment. Here's another question coming through. Yeah, so BF, these are good questions. So the ratio that we're kind of managing right now, the ratio between USDS sitting in user wallets versus the USDS sitting in smart contracts. Because if there are too many USDS in if there are too many USDS in wallets, that means our auto yield obligation becomes very high. So in that situation, what we do is we launch more yield farms. And what that enables is, or what that causes, is DeFi users to acquire USDS, park the USDS in the farm, which earns them various rewards from the farm, but excludes them from the auto yield installment. So if too many people are holding USDS, what we do is we launch more farms. And if there are too many stablecoins in the farm and not enough in in user wallets, then all that happens is we collect more and more CRV for future use. But the added benefit of collecting all that CRV is we can redirect the curve rewards to better produce higher yields on our pools that generate the auto yield for the stablecoin holders. So feel free to talk. We can talk more about that, but that is a kind of a tricky balance that we're working on, and the community is going to have to ensure that auto yield is always, and that we can continue to collect CRV rewards to further enhance the auto yield rate moving forward. All right. I think those are all of the questions. Any other live questions? No. All right, well, that's everything that we have from our side. So thank you. And Sub, if you have any other final comments, let them rip. If not, we'll send everyone on their way.
I think yeah. So that should be it from our end. And thanks a lot for joining us, guys. And as I mentioned before, we are looking to create more active engagement and listen to what you guys have to say about our product and how we can improve your DeFi experience even more. That is, these are one of the some of the things that we want to actively engage with you guys on. So if you guys have any ideas, please start sharing with us on Discord. And yeah, looking forward to speaking with you guys again next week.
Thanks, Sue. Thanks, everyone. Don't hesitate to reach out if you have any more questions. We're always available, calls, for chat messages, whatever it might be. So thanks again, and have a wonderful day.
Guys.